Hello and welcome back to 17 Nexus. This episode here we're covering the Plum deal memo. First was AI, a bit more lighter, I think 15 minutes. This one's going to be way more in depth. And just to express my thoughts, views on a few things, some more controversial than others. Well, one of them is really actually controversial in my opinion, but we'll get to that. But yeah, without further ado, Plum is a fintech platform within the UK, allows individuals to get rid of decision inertia and allow them to save and invest beyond measure, really. And I think that's really one of the superpowers core to Plum. It always has been ever since they were founded, and still is going after almost a decade now, shy of a decade, actually, 9 years. What's also cool about Plum too is that they are offering this behavioral superpower to UK customers and European customers too, 9 European countries. So we'll go into that. But yeah, founded in 2016 by Victor and Alex. And the people that they're serving are those in France, Spain, Ireland, Belgium, Italy, Portugal. The list goes on, right? Current traction to date so far, as when this document was created, 2 million customers across Europe. Assets under management exceeded 1 billion in May 2024. Obviously, I feel like this period alone, prior COVID-2, had a big rise to play with not only Plum, but also other fintechs, be it solutions and then fintech banks, right? And yeah, revenue jumped as well, average revenue per user, so that's pretty good to see. On track to reach profitability by 2025. Quick tangent here. I feel like some people, probably a lot in this ecosystem and space, don't appreciate the truth that the first 5 to 10 years of a startup, they probably won't be profitable at all. But then after that, it's then pushing towards that profitability, right? So Amazon wasn't profitable for about 7 years or so, correct? And all the case studies I've done too. Instacart recently, they weren't profitable till about 2017, 18 or 16. I was one of those three. And it's like, but they're generating revenue. What do you choose? What do you look at as an investor? And I guess, yeah, there are things to look at, right? But when do they make that shift, then break into that profitability? I guess it's just a time game, really, right? There's no pressure, really, external pressure, and there shouldn't be, hopefully. If there is, and that's a problem. But take your time, find a product or service, grow the numbers that truly matter, then make that pivot, right? So hopefully by 2025, they actually do reach profitability. But from 2016 to now, it's all been revenue based. That's just how the game works, right? Series B is where I joined the party, especially as an individual retail angel investor, whatever you want to call it. What's pretty cool is to see them balancing and being able to provide a product or service to European and UK individuals, especially launching ETFs for European customers, the partnership with Eurobank, and the strategy or game plan for Greece is pretty interesting, especially given Greece's economic history. So this will be pretty cool if they can leverage that and build on that. Take your notes, right? And then offering cash ISA to the UK, it was inevitable, really. I mean, you have to. The growth strategy is by 2027, have 5 million users, grow their product offerings in the UK and Europe, provide more stock opportunities, Visa debit card. This will be interesting to see how things go if they actually do roll this out by then, or at least before 2030, right? And then partnering with Bitpanda is actually pretty cool. I used to work for an arm of Bitpanda called Bitpanda Pro, and that was pretty interesting. That was actually an internship. And yeah, Bitpanda's been growing pretty decent, I guess, in a weird way. Or not in a weird way, but the obvious way. Expanding across Europe. Now recently this year they've passed through with the FCA necessities and whatnot to now offer their solutions, well, their product to UK individuals. So it's pretty cool. I mean, they sponsor Bayern Munich and is it an NFL team? I'm not sure if they actually do sponsor an NFL team. No, they don't. That's a lie. But they had some coverage with NFL, whatever. But yeah, doing great stuff, Bitpanda. So let's see how they keep going as well. History is pretty interesting. So Victor was a financial trader, Alex the Cody tech person. And yes, I'm saying no apologies for if you heard the bird noises or the camera hasn't been on, the webcam's horrendous. Do not buy next to go webcams. It could just be my potato PC, but yeah, figure I'll still need to shoot this either way without my face there. But Victor was a financial trader. His father used to nag him about his financial savings and behaviors, given he was a financial trader in the city. So Alex and Victor, I actually couldn't find out how they actually met, but they had a challenge where who could save more smarter and faster within a given time period, right? And Alex developed an algorithm that just beat Victor in all regards. This led to the inspiration of launching Plum, which was initially a chatbot, which is insane, a chatbot only. Now, this is where product people and visionaries or people in this ecosystem say, you know, the first product is not always the best. I mean, you heard before, if you listen to Y Combinator and stuff, this is absolutely true, right? Whatever you build, at least build it and get it out there. And then that's when the real work begins, right? Don't spend too much time ideating or trying to perfect the first version of the MVP. Just get it out there. And it would have been so cool to, I think I did see aspects of what it did look like, but I can't remember. And I feel like an improvement of this deal memo would have been maybe adding an image of what it did look like initially back in 2017, right? But that is just super duper cool. Fast forward 8 years, and now they've done pretty cool stuff. To see where Plum is now, it's more than just a chatbot. But yeah, and the name came from Alex's childhood experience of selling plums, so pretty cool name. Victor, pretty cool experience, I would say. One thing that does grab my attention is TransferWise. He was at Wise, and he was the 5th employee there or something like that. Alex, just Cody through and through. No, Alex is no longer at Plum though. He left in 2020. But yeah, Victor was number 5 employee at TransferWise, head of international expansion. So it's kind of interesting as well. Maybe he's pulling out a playbook here concerning Europe. You know, no, would be cool if I can talk to him, maybe one day. And then, yeah, Alex was CTO and co-founder, but resigned from director position in January 2020. Key execs, there's quite a few. Christopher, he was at Gorillas. Then before that, Macquarie Group, VP of Finance, Marketing, Paulo Lorello, hopefully I'm saying that right. Interesting exposure given his tenure at Uber and Revolut, where you're going to see he has lots of Revolut and Wise, as you see with Abhishek, Vice President of Product. He was at Revolut, and then before then, Product Director at Wise. Kishan, or Kish, again, first designer at Wise. So it's kind of interesting how, I remember seeing it on a social platform, I feel like Instagram, but I can't remember whose was it. PayPal led to PayPal Mafia, but a recent startup, and it's not Fang based. They kind of had the same thing where they all left and kind of did the same similar thing, which was pretty cool. In the sense that they all left to do different startups. Sorry, my brain went blank there for a second. Christos was VP of Operations. Former project manager at N26. N26 is interesting. I might do a case study on them, but great European fintech. Expanded over here to provide its solutions and hopefully expand across the UK. Brexit came and forced them to actually push out and leave the UK entirely because they just couldn't navigate it. But what was interesting as well is I think I remember using their platform and product. It was pretty cool before actually using Revolut, funny enough, and then that led me to actually double down and choose Monzo and Starling. But yeah, NT6 for those that maybe have known of it in the UK, no longer here, no longer providing the services to UK individuals, but still alive though. And hopefully doing great stuff in Europe. So Hewlett, Vice President of Marketing at Sky and then Foxtel. Tina at Posado, it just comes over here. So yeah, the product, there's a lot of stuff here that I can talk about, but really and truly, it nudges the behavior when it comes to saving and investing. And the key thing there is, I had to bounce back, forgive me, because I like doing that. The key thing there is that there's decision inertia and lack of financial knowledge is always going to be an unfortunate case, maybe till time takes its time, I guess. But there's lots of behaviors there that are key, and it also ties into my understanding and obsession with the behavioral nursery from Richard Thaler. And if you can nudge people's behaviors to help them become more literate, make better decisions and whatnot, that's really the superpower. So in essence, in short, Plum just nudges that behavior, removes the friction from decision making by allowing an AI platform to literally just analyze your behaviors, allocate it and direct where it should go, if it's into savings or if it's into a fund investment, and reduces the need or presence for human action, which is a cost efficiency behavior energy wise, right? So the flagship feature of the product is known as moods, an adjustable saving mode function, which allows users to control how aggressively the app saves money for them on their behalf. Can range from less aggressive, shy, to being more aggressive, beast mode. And below we'll see it here. So shy is 50% less than normal. So the base is normal, default setting. Chilled is 25% less than normal. So hey, you're being really conservative. It's like, hey, don't take all of it, but take out 25% or 50% less than the normal, right? Eager, you can take a bit more. Is that a typo I see? Unbelievable. We're not typo, we've got no space. Ambitious, 50% more than normal. Beast mode is 75% more than normal. So you can make it be fully aggressive in saving or really conservative. Either way, it's helping you and assisting you with just saving smarter and better, really. Acts as a multiplier on Plum's baseline saving amount, calculated using AI based on your income and spending habits and available balance. So yeah, then there's also the brain section, which allows them to adapt their saving strategy based on their current financial situation. So that's pretty cool too. What's really nice about this platform, and it ties into, if I had my camera on, I'll point in the book here, 0 to 1 by Peter Thiel. If you're going to create and position yourself, and I like the word position, or at least the idea, or the framework or thesis of positioning, right? If you position yourself well, you're not going to compete with anyone in what you're doing. Like I said in the earlier version, it wasn't said here. When I was on quick tangent, hopefully, this guy, older guy on the bus, back from Stratford, was talking to this elderly two people, right? About Monzo and saving pots, and like how it's so easy to save with the Monzo pots and this and that, and they do everything for you and whatnot. And the relevance there is that Monzo is a fintech bank. Multiple account linking. Users can connect various bank accounts and credit cards, such as Monzo, Revolut, HSBC, etc. As they said, they want to expand and provide a debit card. So does Plum become a fintech bank? That'll be interesting to see if that does happen. But these are banks. If you're providing a solution like Plum, like Moneybox, like Emma, and so you're not competing with the banks to do what banks are doing. You're uniquely positioned to do what you do well. Emma, it's kind of like the Power BI or Tableau for financial spending and behaviors, really, I would say. More so is the spending aspect. Plum is really just the behaviors and just nudging that, fully understands, and I think just leverages the behavioral nudge theory. It would be interesting if Victor knows about the theory, maybe he doesn't. Moneybox is super weird, and honestly, they're interesting. We'll go into it later when we get through. But bill tracker, spend tracker, Plum cards, we covered it already, pretty cool stuff. They do have different options for Pro and Ultra customers. But yeah, to date, the user experience along with the strategic position has seen them positioned to serve more customers across Europe. And again, being able to serve UK customers with UK solutions and European customers with European solutions deserves a round of applause, I would say, because that fine line of being able to balance those two things really well takes diligence and execution. So the free aspects, obviously there's a freemium version as well. I use a freemium, I don't pay for any of these. We have Plum Pro, Plum Ultra, Plum Premium. In context, I think Revolut, I was looking at one of like the highest premium cards, and maybe the return on money spent on that makes sense, but it's like north of £20 a month, right, for a card. But price points here, I'd say are pretty fair, pretty attractive, nothing crazy. The highest is £10, lowest is £3. Gives you different access to different cool stuff, provide more choice for the customer. So in a nutshell, Plum simplifies complex financial processes, addresses the cost of living challenges, what more sort of concerns, I'd say, and educates users about investing and promote financial literacy. Market stuff, again, this will be interesting. The UK fintech landscape is one of the most dynamic and competitive in the world, but I do want to write a newsletter and also a Substack note on this about how I feel like there might be too much glazing on the UK fintech landscape. And there's lots of research and reports out there saying that UK, it's best for fintech, but it's like, well, if we were the best, why is everyone struggling to expand and grow in the States, or at least compete there, right? But hey, I'm not a founder, right? But yeah, shaped by regulatory developments. First of all, this wasn't really the case back in the early 2010s and stuff. There was so much friction. I listened to the founders of Revolut and Monzo, FCA and whatnot were the biggest ops, really, when it came to trying to create fintech solutions in the UK. But yeah, consumer behavior, rapid advancements, Plum, Moneybox, and Memo. And we go through these three in depth through a table that does illustrate them pretty nicely. This segment here, though, will cover market context and ecosystem, broad analysis of UK fintech sector, regulatory environment, automated financial management solutions, and compare, again, Plum, Moneybox, and Emma. You'll see market analysis and financial projections for Plum, a deeper dive into Plum's total addressable market, which we call TAM, serviceable addressable market, which we call SAM, and serviceable obtainable market. This analysis will incorporate available data, industry trends, and reasonable assumptions to quantify Plum's potential for growth and market expansion. So yeah, again, this is all accessible. I'll drop the link here again, but you can really read it through our Instagram page. The link's there. But Plum, Moneybox, and Emma, this is where things get interesting. I'm going to give you a rant on Moneybox, but we'll carry on. So the mission, AI-powered financial super app for saving. Moneybox help users save and invest through roundups and regular deposits. And then Emma, personal finance management app focusing on budgeting and saving. So all three of these are uniquely positioned to provide one core experience to users and individuals. So in a sense, all three of them have a reason to exist independent of one another. But then I kind of have an interesting point, which we'll get into near the end of this here. The moat, AI, roundup investments for Moneybox, and holistic view of finances with Emma. Geographic reach is really interesting. Plum is in UK and European countries. Moneybox is purely UK. And then Emma is actually UK, US, and Canada. This is interesting. I want to use them as a case study to see how things are going with the US and Canada, but makes sense of why the Hollywood break out there. I would say though, if you're a founder for a fintech solution, you're operating and working in the UK, there's every case to expand here and there, but why not just do across the English channel and do Europe, right? But hey, maybe they had a case there and they went to, and hopefully things are working out for them. User base, 2 million for Plum, 2 million for Emma, and 1 million for Moneybox. Again, still a large amount of users for each platform, so that's great. Assets under management, 1.1 billion, May 2024. 10 billion assets under administration. Assets under administration is really they oversee and track. I guess you could use the word track. What assets are being held by them. They don't really actually own or manage the assets. So I was like, okay, Moneybox, fair enough. That is quite a large amount, but if it's assets under administration, it's something different, right? And then for Emma, not applicable, couldn't really get anything from it. Annual recurring revenue, 16.6 million for Plum as of May 2024. 77.2, this is not ARR though, but this was revenue that Moneybox saw in 2024, or they disclosed. And again, Emma hasn't publicly disclosed anything of such sort, so that can't really be deduced. Most recent valuation, 135 million for Plum, 31 million for Emma. But again, this is 2021, so quite a few years out. This is a super interesting one. 550 million for Moneybox. And obviously, you have to sit down and say, like, in a weird way, bro. I think they did a Series D, and Series D is kind of pumped up the valuation, but this is a space, right? Valuations is an interesting price metric and clout metric as well, and all that stuff. It doesn't make sense, being honest, why they held at almost $500 million in valuation. Moneybox, I'm not being rude, but all you do is literally just advertise lifetime ISAs on social media. You have fewer users than Emma and Plum. But hey, I do wish them the best. And to that note as well, they probably deserve their status where they are now, because they're one of the only fintech solutions to actually have executed a secondary sale So those that did invest through Crowdcube or similar platforms were able to sell the shares that they acquired earlier on with Moneybox. So hey, kudos to them. But that being said, 550 mil, someone similar flaunted a number like this significantly higher, and that entity was Free Trade. I think post 2021 or something, it was like 650 mil or 600 mil for Free Trade, or the valuation at least. IG Group acquired them earlier this year for north of 100 mil. And that was like maybe a fair price, and maybe a correct price and good price, I would say. So yeah, that's how the cookie crumbles, really. Well, that's this space. That being said, valuations, just valuations, it's just signals, right? And again, table above is constructed with public information. Any inaccuracies or mistakes I own entirely. And then it's just me talking about misallocation of idle cash, and then just providing more insight on how Plum is uniquely positioned. So honestly, nothing really fancy there. Again, take your time to read it, but I wouldn't cover it in this segment here, given it's the second podcast on this deal memo, but more in depth. What I would like to say though is AUA versus AUM. So many of you probably wouldn't know. And being honest, this was the first time I've ever actually seen assets under administration. So a key distinction in, I guess, finance, but also the fintech space, is the difference between AUM, assets under management, and AUA, assets under administration. Assets under management refers to investments that a financial institution actively manages on behalf of its clients, making discretionary investment decisions. Includes mutual funds, pension funds, and other managed funds or portfolios. Assets under administration represents assets where the institution provides administrative services such as custody, reporting, and record keeping, but does not control investment decisions. Again, Moneybox, 10 billion in assets under administrated and estimated revenue of 77.2, leads into monetization, largely due to its administrative model. And again, that's how maybe they can see the revenue they're all seeing. It would be interesting to do a case study just on them, because curiosity is the best way you learn, right? But I actually never expected to see Moneybox with assets under administration. So hey, the more you explore, the more you learn. Again, positioning, Plum stands out within the UK. Yes and no. Many other people are doing the same thing Plum's doing, but Plum's staying true to what they're doing, and 2 million users, they double down on their niche and they're owning it, right? Emma is doing pretty good. It's expanded to the US and Canada. And Moneybox, again, doing great in what they're doing as well. What I did kind of notice was Emma and Plum, I would say more so Emma than Plum, serve different but overlapping segments. And to some degree, the existence of Emma reinforces the existence of Plum. Again, my understanding, Emma is really just a dashboard for your financial behaviors. Plum aims to fully automate saving and investment. Budget-conscious users may begin with Emma, then transition to Plum for deeper financial automation and vice versa. Rather than direct competitors, they function as complementary tools, supporting different aspects of financial management. And this goes back to the case or tangent, but IPOs, fintech solutions, should they IPO? The Stripe brothers were on all-in-one, and they said Stripe won't in any time soon. Maybe the next 5 and 10 years it won't. There's no need, right? And it's like, well, hey, if they're saying that, then obviously Monzo and Revolut, there's no need as well. I did a newsletter on that as well, and it was interesting. I posted a newsletter this week on the IPO hype and everything. Klarna said they will, and if they do, then they're still on business and they should be doing it. And if they don't, then it's like they didn't stand on it, right? But it's like, there's really no need. And if you do IPO, you're really playing a whole different game than what you were playing before as a private company, right? You're now public, like so you're on center stage, you can't afford to mess up whatever, right? You kind of see that with Peloton, as I did the case study there. As soon as they IPO, their logistics chain of Taiwan was a problem. Faulty bikes, they had to pull them back. All bad experiences. And kudos to Peloton, because they probably could have died, but they persevered and pushed through. I mean, if you're public, then more pressure on you, but you play a different game, right? So to that point as well, I do see it likely, highly likely. I mean, Nutmeg was acquired by who? JP Morgan or Morgan Stanley? Nutmeg was really just a financial investment platform, kind of like Invest Engine, which exists now, right? Just completely on that. It still amazes me how Nutmeg was acquired, really being honest. Don't think the product was that unique, but it got acquired anyway. Kudos to them. Memo and Plum are positioned to be acquired. I don't really think Moneybox is as of now. It would be interesting if they do become acquired or ever get acquired. But that being said, all three of them, I'd say there's no need for them to IPO. Not in the next 5 to 10 years. Easily, no. But yeah, that's a whole different segment. I'll cover a bit more on 17 Nexus, really. But Plum's strategic inflection point, expansion versus market penetration. Plum has demonstrated strong traction and performance, but its next steps will be crucial. Do they expand more into more European countries, let's say 15 or 20? Or do they provide more diverse products and market penetration? Alternatively, should Plum focus on strengthening its UK presence by providing more solutions, which they are kind of doing already with the partnership with Bitpanda, and attract more and retain more customers? So what's apparent here is that I haven't been inside Plum, but it seems like if they plan on getting 5 million customers by 2027, they're already 2 million there, so hopefully halfway through the process in 2 years. Compounds over time, hopefully it does do that, and if they do, more power to them, that's great. But if they can do that and simultaneously diversify products, offer new solutions, the crypto thing is something they haven't offered before, offer that to customers, then that's would be great as well. Just all in all, provide a better product, play the product game. That would be pretty amazing diligence. And I'd say they might even be a case study for like business schools, right? Expanding across UK and European markets, but also at the same time, understanding how the product needs to cater customers in different geographic regions. But yeah, moving on to that, we're going to do the hypotheses, or really the analysis of the TAM, SAM, and SOM. So the total addressable market, serviceable addressable market, and the serviceable obtainable market. So the market analysis, we'll just go over the key assumptions. Geographic focus, Plum operates in the UK along the 9 other European countries. Target audience, tech-savvy individuals, particularly Gen Z and millennials. Those interested in automated their savings and investing. Kind of excluded the older generation, but they could still be considered to be tech-savvy individuals, but very conservative here. Average revenue per user is still growing, but I will set a conservative estimate of £40 a year. Again, they had different subscription models, free base products, and then £2.99, and then it all went all the way up to £4.99, then what, £9.99? So the last one is market penetration. Plum is growing rapidly, and in the fintech space, it's super competitive to really double down and own your moat or unique selling point. Gradual realistic penetration rate will be assumed. So TAM is the total addressable market, considers the total number of potential users who could theoretically use an AI-driven financial platform. SAM is a portion of the TAM that you gauge and get that Plum can realistically reach based on its geographic focus and regulatory constraints. SOM, serviceable, obtainable market. The market share Plum is likely to capture given competition, adoption rates, and brand positioning. So we'll go into the calculations here. Base population, considering the countries Plum is serving, an estimate is probably 350 million. Target market, let's assume 30% of the adult population are tech savvy and interested in fintech solutions such as Plum. I want to go on a quick tangent here. What is interesting, especially with the case study of Peloton, say it here. Peloton wouldn't have succeeded if it started and developed a home base in UK. Europe, potentially, and even decided upon, no. There's a weird consumer aspect where Americans are actually just willing to try and consume new things. I don't think we have the same thing over here. And I'll go into that more later in 17 Nexus stuff, but not in this podcast. But I feel like that adoption and the ability to just try a new product, maybe expand to another country, let's say an Eastern European country, more people willing to give it a shot, then yeah. So 30% of that population is 105 million. So the TAM calculation, we're taking the average revenue per user and then the total potential customers. Multiply that together, you get 4.2 billion. So the total addressable market that they're in, or at least playing in, is 4.2 billion. Now the serviceable, realistic reach. Assume Plum can realistically reach 15% of its target market in the next 3 to 5 years. This will be super interesting. Again, ties in with the ability to get 5 million customers, considering its marketing position and the dynamics. Simply, we just take the calculation from above, 105 million customers, times by 15%, times by the average revenue per user, you get 630 million pounds. You're using GBP here. Now, the obtainable market, achievable market share. Assume Plum can capture 25% of its SAM, which we said was 630 million, in the next 3 to 5 years, again, based on its current growth rate, product innovation, strategic partnerships. Some calculation would then say 630 million multiplied by the 25% is 157.5 million. So Plum's market potential is pretty significant, I'd say. TAM, as we said, is large. The SAM is relatively large too. But the obtainable one is where the opportunities are, right? Being able to capture some aspect of some percentage of this to get you north of maybe 120, 130, 100, well, I said 150 million. That'd be pretty cool. One thing that probably will enable that is their partnership with Eurobank in Greece. Again, if they can grab a large percentage of Greek customers, cements them, right? And just probably just have a social network flywheel from there. Well, network effects, really. Risk assessments and mitigation for Plum. This is interesting because you're obviously going to shift now and consider yourself or concerned with risk and stuff. Plum operates in a highly competitive fintech space, lots of regulations, lots of problems and nuances here. Again, N26 more or less just had to cut off all this all UK expansion because of Brexit alone. Plum has put itself in a unique position where it's serving 2 customers and then 2 entities. You have MiFID, or at least European regulations in Europe, right? And then you also have the FCA, the UK too. But if you play the long game and you can navigate those things, you can do it. Bitpanda is a good example, and they provide crypto solutions. But the market saturation is heavily saturated. Again, you take a step back, all the fintech bank solutions are providing some element of what Plum is doing. Monzo, Starling, Revolut, automated savings, pots, this, that, right? Again, like you said, there's reasons why Emma and Plum can exist, dependently and independent of each other. And maybe there's a whole ecosystem. Having free bank accounts with these guys, but then also having Plum makes you a smarter financial user, really. So all in all, but then that being said, that can also backfire on them too. So what is apparent is that all 3 of them, at least the fintech banks that we mentioned, Monzo, Starling, and Revolut, aren't really tripling down on the AI aspect, which Plum saw and has been true to for almost a decade now. The strategic partnerships is playing out in their favor, so hopefully that does work out. If they need to expand into Eastern Europe, they'll probably partner with someone really cool. Focus on Plum here. The revenue sustainability, subscription base is key. I mean, you had Slack and Atlassian then offer a free model. Slack did. Everyone just gravitated to Slack. And the founder of Atlassian was kind of like, hey, why is this the case? Well, we don't offer a freemium, right? Plum offers that, thank God. And then beyond that too is the subscription base, playing with pricing and price points. It's unit economics, right? Or price economics, you could say as well, I guess. Increasing competition could also pressure Plum to reduce subscription fees, possibly, and impact on profitability. It's that fine dance, right? How great is the product to justify the price? And if not, then you end up competing, right? But if you're that unique and that well positioned, your prices validate what you're doing. The great example of that is Revolut and their crazy prices for like their metal ultra card, whatever. I think it's more than like £20 a month for a card, which is insane. But people pay for that. So yeah. User retention and acquisition costs. Again, CAC and these things matter. When I say CAC, cost of acquiring customers, it's the whole marketing and competitive aspect, but also your storytelling, right? If Plum fails to provide consistent long-term value, you can't cheat value. There'll be a churn and customers will just gravitate somewhere else, maybe to Moneybox, Emma, or just stop using or have a use case for Plum. The mitigation strategy is just really doubling down on the product, amplifying the story being told, and also implementing loyalty programs, really, referral incentives, but also trying to spice things up in terms of product offerings. Again, you just learn that through the products game, and hopefully find more solutions to provide. Good example could be maybe, I don't know, Avios points or rewards points, whatever, with different partnerships or so. Could be cool. Or maybe they double down on the financial educational aspect. I don't think anyone's really done that to that extent, other than infamous money box. But try out something. If it sticks, then double it down, right? That's the products game at least, but be quick and deliberate. Regulatory and compliance risk. N26 died in the UK. Everyone else, fintech banks at least, were able to navigate that whole Brexit phase. They did as well. The partnership with Eurobank at least provides them with a policy cushion, especially in Greece, and if they can strategize in that part of Europe, west and south, then maybe the north and east will be set and primed to open for them. Really. So it'll be interesting to see if they do execute a plan. And I feel like if they can somehow take a few notes from Revolut's playbook on how they expanded aggressively first in Eastern Europe, then kind of came back here to the UK, if I'm correct. That'd be pretty cool. But again, Revolut's expansion in Eastern Europe, or at least Europe alone, you have to take notes from business, students, or whatever. If you're in the tech ecosystem, at least in Europe, right? You have to take notes. Both success too, especially in Eastern Europe, was a luck, but also a great strategy to learn from as well. Case study. Moving on beyond from that, cybersecurity and trust. This is true for every and any entity. So the mitigation strategy is really understanding that every turn and opportunity you take also has downsides and risks, right? Customer satisfaction and customer reliability are so important. Satisfaction in the sense that there's no fraud or no mishaps or money being lost. Transparency and security practices is key too, and how the data is being managed and secured. Last thing you want is bad experiences. Bad experiences will end up in the word of mouth, at dinner conversations or office conversations, people uninstall and stop using the app. Deal. It's actually his first time doing it, so shout out to again BBP's deal memo on Twitch. The inspiration and kind of through in the deal aspect here. This is going to tie into and surprise Selma AI Finance, which is then going to tie into a bigger thesis I have into the whole fintech space, as I kind of noted earlier on, right? Why I don't feel like it's as superior or epic as we glaze it to be, at least in the UK and Europe. But Crowdcube, I joined in on Plum Series B round, 10 ordinary shares. It's funny because at the same time, I figured let me get 10 and let me get more shares of Selma AI Finance, because I love Plum, they're great and stuff, but I took a bigger bet on Selma AI Finance, and they're based in Switzerland. So when I cover them, I'll hopefully explain more in depth why that happened and why that's the case. But all in all, believe in both of them, and hopefully they do things well. And at least one of them should be successful in my thesis and hypothesis. And if it is, then I'm happy. But more on that, hopefully, the years to come, if they do acquire, sell, whatever. But yeah, shares are held as a nominee structure via Crowdcube's Nominees Limited. And I am the beneficial owner, but not listed in Plum's direct shareholder register. So you go through Plum shareholder register, you'll see Crowdcube Nominees Limited. I am within that, but I am not uniquely there. This structure grants me full economic benefits in the event of liquidity events, IPO, acquisition, or secondary share sale, but no direct voting rights. So yeah, again, Crowdcube's just another way to see new opportunities and invest in them. Oh yeah, and then its EIS pre-money valuation was 135 million, and the investment qualifies for the EIS tax relief, which I will cover when I pivot 17x's to do more educational stuff, because you have EIS and SCIS, which many people won't understand, but it's trying to democratize the space. So investment terms and equity positions, security type, it's ordinary shares. And then you have different shares. You have ordinary, then you also have preference shares, and there's a few other different ones. I need to cover that through 17nexus. Pre-money valuation, 135 million. Post-money valuation to be determined based on the final fundraising size. Number of shares held, 10 ordinary, and really and truly, you could pull out the post-money valuation. We did kind of see it earlier on. But equity ownership, or you could also just try and mess around and find out a new post-money valuation. Equity ownership, not directly disclosed with individual investors. Dilution impact, while the exact post-money valuation depends on the total funds raised, this round likely represents a dilution factor of X to Y percentage for early investors. So those who were in the pre-seed, seed, or Series A, they might have experienced a dilution factor of a few percentage points. I came in at Series B, so Would I see any here? No, not now, really. Hopefully I'm not wrong as well. Damn if I am, own the mistakes. But if they go to do a CVC and so on, then I will see dilution. Dilution is really the idea that, hey, you come in here at this time, or you choose to invest in the startup at this time, X amount of shares for X amount of price. If they continue to raise more money, which is true for most of them, those people who were early see a dilution of their shares early because now more is going to be available for more people. And that's just a natural case. Again, something else I'll cover over, and really all this really for 17 Nexus will be great stuff. Investor rights again, given the case that I'm underneath Crowdcube, I have no direct voting or decision-making rights. So exit considerations for Crowdcube investors such as me. As we are nominee shareholders, potential exits really are just seen an IPO, an M&A deal, or structured secondary share sale. Again, shout out to Moneybox because they actually executed one of these. So it's good to see that some people do this. However, liquidity events depend on Plum's agreements, really. So really and truly, Plum determine what happens. If they're acquired, shareholders may receive a cash payout or shares in the acquiring company, depending on the deal structure. IPO and public listing. If Plum goes public, nominee shareholders will hold publicly traded shares and may sell after any applicable lockup period. Secondary market sales. Crowdcube investors may have the option to sell shares in later funding rounds via structured secondary markets. So availability is given to Plum and Crowdcube, negotiating that really. So those aspects are really ways that I could see a return or tangible return on investment. Other than that, it's all locked up till whatever happens, right? Scenario analysis. This is interesting. This was seen in BVP again, their memo for Twitch, but I think it's pretty cool because it lets you figure out potential outcomes, right? So Plum Series B table, Crowdcube, outcome, exit value, time frame, probability, multiple, exit path again, completely owned by me. Any mistakes or inaccuracies, yeah, but it's really just me just gauging the possible outcomes. So outcome number one, wipeout. Plum dies, dead. Exit valuation is 0, nothing. Time frame, next 5 to 10 years. Hopefully they don't know in the next 5 to 10 years. Probability, I said, look, well, if it's a startup, there's always the possibility of dying. The case study of Go Forward Health showed that, even though they raised crazy amount of money, just disappeared and died 2024. So there's always a possibility. To that being said, the multiple or the X returns, you see nothing because it all just disappeared and died. Exit path, company shut down, no liquidity. So exit value, no growth. It really should be like low growth. But Plum reaches market saturation. As results, its growth plateaus and the company is acquired by a fintech player at 2x revenue multiple. It's funny, you kind of see these low price acquisition deals happening when, for instance, a company I worked for did it actually with a competitor in Europe, France, and they got acquired, and it was really just a strategic case for the company to expand its offerings and services to European clients. But again, a few years ago, that French entity had a high valuation, distressed and already struggling, running out of cash. The valuation dropped significantly. A bigger person comes and just acquires you, probably have a great unique product and whatnot, but lower price, strategic, and move on, right? So exit value is less than the valuation of the Series B, which was 135. Say they drop down to 100 mil, next 5 to 10 years again. This is possible, more likely than dying, but again, you never know. But I said 20%, multiple is 0.74, so you don't really see a great return on investment here, Kamani, but low valuation, acquisition, or forced secondary share sale. Slow growth, Plum continues to grow by a declining rate. Reaches 3.5 million users instead of the 5 million it had as a goal. But monetization struggles and increasing competition limit expansion possibilities, opportunities. Acquired for 5x revenue by mid-tier fintechs such as Monzo or Wise, again, just a case, but gives you some context, right? They could be acquired for a bit more, 250 million valuation maybe. 6 to 9 years as a time frame, I'd say. So that throws on maybe almost 2 decades now, really, 2017, 2016. This is possible again, highly probable, 20%. See you close to 1x, 2x return, which is all right as a retail angel investor in this space, really. You really don't want this if you're a VC, but if you're doing this on the side, then this is fair. You know, you can't really do much, but it's like, you take that, right? Strong growth. Plum scales successfully across Europe is really what I'm hoping for. surpassing 5 million users, powered automation. It'll be interesting. I even said PayPal may consider and acquire them or Stripe, right? Use case will be interesting. I feel like if they want to diversify offerings, they could. Acquires a company at 7x revenue, delivering strong investor returns. Valuation now reaches 500 mil. The timeline is 7 to 10 years. It's possible, 15%, more conservative than the other ones, but you see almost a 3x return. Again, everything up to now is not concerned an IPO, and I'm still very strong on that. If you're private, there's really no need to IPO, man. Unless you're going to shift and play that new game and become public, right? But yeah, Plum's case, I don't see them really IPOing anytime soon, or at least in the next 7 to 10 years. If they become a market leader, from Plum to be a market leader, 8 million users, minimum 10, but even 8 million, right? You need to have a super strong foothold within Europe, at least. Then maybe global. But if you can win and own Europe as a fintech solution, not fintech bank, but as a fintech solution, then JP Morgan or Eurobank, the one to partner with, would be like, hey, these guys are pretty cool. Let's acquire them, right? And hopefully that's the game plan and gameplay. That's going to take a long time, though. 7 to 12 years to just be in front of everyone's phone, app store, really. 900 mil, 7 to 12 years. Probability of this, 10%, but there's possibility. This is where you see a 6x return or close to 7x return. So as an investor, you buy X amount of shares. If you're really an angel, I think you really are satisfied with anything higher than 1x returns on investment. And if you see north of 5x return, it's like, oh, not a bad pick or not a bad bet, right? Anything north of that, you kind of get more excited and happy. But yeah, premium acquisition by a institution, major institution, or fintech entity. And again, still not IPOing, so this isn't being acquired. Again, if they build something great and position to acquire, if they feel happy to do that and get acquired, then yeah. Then the home run. Note, please, valuation-wise, Moneybox, last valuation was 550 mil. Plum was what, north of 100, 130 or so. Plum becomes a unicorn, surpassing 100 million ARR. That'll be interesting. Can they break 25? I think so. It's going to take time for them to break 50. To break 100 as a fintech solution and not expanding beyond that, again, to do that, they have to do something really great. But we'll see how they go. And then if they do that, then it's kind of the case, well, hey, you're north of 100 million ARR. You played a long game. The IPO and all that stuff there, again, on the stock exchange or NASDAQ, approximately 8x to 12x revenue, offering a 10x return for early investors. Do they do that? And then they reach a valuation of 1.5. This is highly unlikely. Like I said, 5%. Sorry, Plum, I love you, but I don't really see you. I'm going to be careful as I'm making this, right? It's 2025. Give it a few years. If they do become that, then yes, I'm happy. If they don't and fall in between one of those guys, other than dying, I'm happy as well. But this will also test a thesis that I have lined up with some AI finance. We'll touch up in the upcoming podcast when that time's relevant. But then it's IPO. And if they're IPO, then that's the home run. As an investor, angel, VC, whatever you want to call yourself, employer of equity, IPO is kind of the end game, right? But then after that, the game still carries on. But it's like, hey, now we're public. Now things change. So yeah, that's pretty cool. Kind of just doing that and sitting down to myself or thinking to myself about it. Conclusion. Plum has successfully positioned itself really to be competitive in the fintech space, offering a unique solution that others haven't really doubled down on and focused on. But now they're kind of pushing towards it and learning it or providing it as a unique experience for users. And yeah, just the time we'll see how things go, really. Plum's direct competitors really are Memo and Moneybox, I would say. I mean, you could say Monzo, Starler and so, but they're banks. They're not fintech solutions. Banks have to do a lot of things. Fintech solutions can really just do one thing and one thing well, then expand, right? Banks can do, well, they have to do many things well to exist, right? Fintech banks as well. Plum focuses on automated savings and investing. It has been forever, still is. Plum specializes in budgeting. Moneybox is really just UK customers on saving for lifetime, right? Or saving for your house, right? Has been expanding in Europe. I really love the fact that Plum is serving European and UK customers. Again, its expansion in Greece is pretty cool. partnering with Eurobank with a goal of getting 700,000 customers. You get 700,000 from one country alone. Crazy, right? Is that possible? Maybe, maybe not. Launching a Visa card and ETFs for European individuals. Product expansion, you have to do it. These moves put them over Emerald Moneybox, but again, they're not competing in the European geography. So that being said, who is really competing with Plum in Europe and what they're doing? No one, NT6 and a few other minute guys really, but maybe, and that's really it. Does Plum end up competing with Selma AI Finance? I may have to cover that and possibly say it. And again, to give more context, Selma AI Finance is a AI financial advisor being offered to individuals within Switzerland. The big bet was really many things, but also the psychology and sociology of financial behavior in Switzerland. Again, coming up from the Nudge 32, it'll be interesting to see how Selma does in Switzerland, if it does reinforce a few things I'm holding to be true. But yeah, beyond that as well, Plum's positioned itself to defend when people talk about competition, but again, competition doesn't need to be a thing. You're doing something that the big guys aren't doing, you do it well, you link their accounts to yours, you're not competing, you're not a direct competitor. But Monzo, Starling, and Revolut, you could say they're all direct competitors to each other, but also not at the same time. And beyond that, again, learn from Revolut's early playbook concerning European strategy expansion or European expansion. It's 9 European countries now. When it goes up to 15, then 20 European countries, I mean, then that's GG. A fintech solution to be serving that many customers across the European continent, kudos to you, Plum, when and if you do pull it off, right? The last part here was really just appendix and metrics. So you have user growth and engagement. And to be honest, I should have said this at the start by then, but we'll still go through it. So active users, 761,000 as of 2023. Depositors, 440,000. Total customers, 2 million by 2024. European expansion saw 290,000 users onboarded as of May 2024. Engagement, over 50% of users transition into long-term, lifelong Plumpsters. Financial metrics for you, assets under management, 235 in 21, 306 in 2022, 477 in 2023, 2024, crazy, just almost doubles, literally. And the lifetime ISA launch saw 534 million net deposits in 3 months here in the UK. So again, this is the product game, right? That's great to see along. Revenue and business model, ARR, annual recurring revenue. So 4.5 million in 2021, 7.3 2022, 16.6 2024. That's good. You can't complain. It's growing, the recurring revenue. You would say double figure millions as it reaches 16. And it's like, well, hey, now we've got to get to 20 and 25 and you just keep on growing and making a greater product, right? Revenue breakdown as of 2023. This is actually pretty insightful and pretty cool to see. So subscription revenue was a big chunk, roughly 70%. Transactional fees, 5%. So again, they're not really focused on the transaction game. It's really subscription, and that's what they're positioned to do. Interest spreads, entity like this should do that. And really and truly, again, 17nexus should be covering stuff like this. So I probably will cover what interest spread means. I didn't actually cover it here, unfortunately. Management fees, again, how much they charge to just manage the, I guess, assets, the platform, all that stuff there. 5%. Customer engagement and satisfaction. User ratings across major app stores, it's 4.7 out of 5, so that's pretty cool. Based on 80,000 reviews. Awarded the best financial app, wouldn't be surprised, from the British Bank Awards in 2023. Customer feedback, users praise it for its simplicity and opportunities to just change the financial behaviors. Efficiency and profitability metrics, customer acquisition cost and retention. Lifetime value, LTV, so it's the lifetime value of a customer, right? Over the CAC ratio in Q4 2023, that was 9.5x. And there's a range as well. Again, I should cover this in 17nexus, what LTV CAC is, why it's so important for startups and so on. But customer acquisition cost, it is cheaper to acquire a customer in Europe than it is in the UK. And I mean, like, Revolut probably experienced this as well when they were expanding. And I feel like it is probably an absolute truth. It may be cheaper to acquire customers in Europe than it is in the UK. Why? I'm actually not sure. When I do cover this and do more educational stuff in 17nexus, I probably will touch upon that. Gross profit margin was 2.4 million in 2021, 3.9 in 2022, 8.8 2023, or gross profit actually, 126% year-on-year growth. That's pretty decent. Can't complain. The gross margin 64% in 2021, 71% in 2022, 80% 2024, showcasing strong operational efficiency. Again, terms like these are really fancy terms, but once you see them a lot and you read books like Warren Buffett interpreting financial statements and read 10Ks and 10Qs, even though that's US based, but financial statements, this financial jargon makes sense. Again, I should be covering this in 17 Nexus, and I will make that pivot. Net loss and cash burn. Really, really key things. Net loss is how much money is being really eaten up by the entity or company. So 10.9 million as of 2022. 2023, it's gone down a bit to the 7.8. Cash burn reduction is 4.5x from 2022 to 2024. Again, that was all due to public information. So yeah, all in all, strong believer in Plum. Do they get acquired? Strongly possible in the next 7 to 15 years, maybe. Do they IPO? Oh, in the next 7 to 15 years, that time frame. If they end up doing great things, then maybe, yeah, then they can be a position to IPO. IPO now in the next 5 years, or no, get acquired in the next 5 years, maybe, who knows? Die, disappear? Hopefully not. And yeah, looking forward to doing more stuff with 17 Nexus, as I kind of said through that appendix part there. But then this ties on the Soma AI finance play, and when that comes out in time, slowly documenting or sharing new stuff in there, you'll see the thesis, you'll see the hypothesis, everything's going to be live with 17 Nexus. And again, apologies that I couldn't shut my face this time, but webcam wasn't working, still had to get this out. So yeah, hopefully that was great. If you were in there, drop some comments or questions, make some notes or whatever. But yeah, that's the second deal memo, and thanks for joining me.